Hello and welcome to Freelance Corner's first webinar, where we'll be speaking to Andy Chamberlain, Director of Policy at the Association of Independent Professionals and the Self-Employed, also known as IPSE, about the financial support available to freelancers and the wider self-employed community at the moment. Thanks for joining us, Andy.
Hi, thanks for having me.
For all the listeners joining us, please do feel free to submit your questions and Andy will have the chance to answer them at the end. I'm Jess, Content Editor at Freelance Corner and co-host of Freelance Corner's podcast, Freelance Party Broadcast. I'm joined by my co-host, Faye Newman, who's Campaign Executive for Freelance Corner as well.
Hello. So I'm excited to get started on this topic actually, because it's something that's being discussed very broadly across Freelance Corner and the platform itself, and also Twitter and all the other social streams too. So for those who haven't signed up for Freelance Corner, it is the online platform for the UK's freelancers. So it's providing an online community as well as some fantastic support packages for freelancers. So it's full of risk reducers for you and for your business. So today's webinar is all about risk. So many freelancers telling us at the moment that they're worried now more than ever. So Andy, for those that don't know about IPSE, can you explain a bit more about what you do?
Yeah, so IPSE is the Association of Independent Professionals and the Self-Employed, as Jess has already said, and we are the voice of the UK's 5 million self-employed people. We represent them to government, and at the same time we provide them with packages of support to help them with their business. Now, I'm in the policy team, so it's my job to we basically ensure that the UK remains one of the most flexible labour markets in the world, which it is at the moment, but there are threats to that, and we've seen lots of discussions around whether self-employment is broadly a good thing or a bad thing. We say it's broadly a good thing with some bad examples, so we're communicating this to government and saying, whatever we do, if we regulate too much, we could crush the vibrancy of self-employment. So that's our role, is to try to promote the benefits of self-employment, not just to individuals, but to the businesses that they work with and to the economy as a whole.
So IPSE was fairly instrumental in getting this self-employment income support scheme, or SEISS as it's now known. Can you tell us how that happened? What was IPSE's role in that?
Yeah, so I've got some slides which hopefully you'll be able to see as well. And by the way, if anyone can't see the slides or hear us, then let us know in the questions box. And also, as Jess says, I'm very happy to take any questions as well. So IPSE wrote to ministers way back in February, when this is way before the lockdown, or several weeks before the lockdown took place. But it was pretty clear that the coronavirus was this thing looming. It wasn't just looming on the horizon. I mean, it was on our doorstep, and it was clear that it was going to be not just a health crisis, but an economic crisis too. So we wrote to ministers and we said, ministers, please put something in place for self-employed people. They don't have the same protections as employees. And when this hits us, our economy is likely to stop and millions of people are going to be significantly impacted. Their businesses are going to be, essentially, business is going to stop dead for thousands, if not millions of people. We gave evidence at several parliamentary committees around the same time. So the first one we did was at the Bayes Committee. We also spoke at the Treasury Select Committee, and I might talk about that a bit later on. And what we began to lobby for was something called, which we were calling at the time, a temporary income protection fund for the self-employed. We'd already seen some examples internationally. So Norway had done something and put something in place for self-employed people, guaranteeing them 80% of what they might reasonably expect to earn during the period. We were calling for something similar. Crucially, we did say that it should apply to all people who work for themselves. So not just sole traders, but people who work for their own limited company, people who describe themselves as a consultant or an interim, whatever it is. If you work for yourself, you should be able to benefit from this fund. What we got was SEISS, and the Self-Employed Income Support Scheme was announced on March the 26th. The Chancellor gave IPSE a nice name check during the announcement. And that sort of was where, you know, that was the fruition really of IPSE's campaigning, and other groups as well. We did join up with quite a few other groups, notably the Creative Industries Federation, and we did a joint petition with them, and we had well over what did we get to? We got to I think we might have got to 200,000 signatures. I'm not quite sure now, but we got a lot of signatures fast to our campaign. And so, yeah, we got the SEISS, and we were very much delighted to have it, because before that, we weren't sure what the government was going to do, if anything, for self-employed people. We are involved in ongoing discussions around the SEISS, the future of the SEISS, and other schemes as well, which to a certain degree help self-employed people, but some self-employed people aren't helped at all by them.
So who is eligible for SEISS? Could we just touch on that a bit for anyone who isn't completely aware who is eligible?
Sure. So in order to be eligible, and hopefully you can see this new slide here, you must have had a tax return in 2019, and you must still be operating as well. If you filed tax returns in 16, 17 and 17, 18, then HMRC will use those to calculate your grant as well. But the key one is the 18, 19 one. If you didn't do a tax return, then you're not eligible. You must have had yearly trading profits which average no more than 50,000. So basically, if you've earned more than 50,000 over those 3 years, or even just over 1 or 2 of those years, if that's all you have, but if you average that out and you've got profits of over 50,000, then you are excluded from the scheme. And more than half of your total income must have come from your self-employment. In other words, if you are, self-employed a bit, but most of your income comes from an employment, you're not included in the scheme. You don't get anything through the scheme. If you do claim a grant through the SEISS scheme, you can still work. So it's not like the job protection scheme, which is the furloughing one that we've heard a lot about, where you have to furlough the person who's ultimately benefiting from the grant money. In other words, they can't work for the company. If you're self-employed and you make use of the SEISS scheme, you can carry on working. There's nothing to stop you, and you can claim the scheme as well. So that's they're the broad parameters of how it of who's involved in who is eligible, who is included in SEISS.
So for those that aren't eligible for this scheme, is there anything in place for these kind of groups?
Well, it's a good question. So this is where it's become controversial, the SEISS scheme, because while we were delighted that the government set it up, and actually we think that it's quite generous, and I'll talk about how the grant is calculated shortly, it's got very sharp edges, and if you fall outside of it, it doesn't help you at all. So it only applies to sole traders and members of partnerships. Basically, you have to have done a self-assessment tax return as a sole trader, not if you are a limited company director. If you work for your own limited company, you are not included in this. And a lot of people, particularly we found in the creative industries, a lot of people working in film and TV, for example, when they saw Rishi Sunak give the announcement that this was going to be set up and that there was going to be this grant money available, they thought they were included. And then they were pretty shocked and distraught to find out that because they work for their own limited company, they're not included. Surprised a lot of people. And that is the fact, though. You are not included in the SEISS scheme if you work for your own limited company. It also doesn't cover those who are newly self-employed. So when I said you had to do the tax return for 2018-19, if you started being self-employed after April 2019, you wouldn't have done a tax return for that year, because why would you? You didn't have any income to declare. You are not included in the scheme if you only started trading since April 2019. So that's a whole year's worth of people who are new to self-employment, and there's a lot of people in that boat, because there's a lot of churn in self-employment. So lots of people become self-employed, lots of people stop being self-employed. So there's quite a lot of people who miss out for that reason. We have been saying to the government, look, you should really allow people to file a tax return for the year 2019-2020. Essentially, by the time the scheme was announced, we'd almost pretty much got to the end of that tax year. There's nothing to stop people now filing a tax return for that tax year. And I don't really see a good reason why they couldn't be included in the scheme based on what they file. The government say that the reason they can't do that is because they're worried about fraud. And they don't just mean, you know, mischievous accountants and cheeky self-employed people perhaps trying to inflate their earnings in order to receive a more generous grant. They mean proper, serious, organised crime, fake IDs, entirely fake tax returns, kind of fraud. And they're worried that it would leave them open to that. I've been saying, well, we at IPSE have been saying, surely there's something we can do to mitigate that risk. You know, the taxpayer reference numbers that they've given out aren't easy to hack. There should be a way around that, but the government are sticking to that for the time being. I've also mentioned those with profits over £50,000 are not included in the SEISS scheme. Well, we say there should be a taper after £50,000 to avoid that sharp cliff edge, because essentially now, if you have average profits in the relevant tax years of £49,000, you'll get quite a generous amount. You know, you're actually going to do really well out of the scheme. But if you just sneak over that a little bit and get over 50,000, you get absolutely nothing. That doesn't seem right to us. If you earn over £50,000 but less than £60,000, you could have 70% rather than the 80%, and so on and so forth. So you could begin to taper it down. It's also, oh, go ahead, sorry.
I was just going to ask, I remember when Rishi Sunak gave that the daily briefing, when he name-checked IPSE, he said that this scheme was meant to cover, I think it was something like 95% of self-employed people. Do you think that's true? What is it? Was it 95% he said, and what do you think is nearer to the truth?
He did say 95%. He was basing that on the £50,000 profit thing. So what he's saying is that 95% of self-employed sole traders earn less than £50,000, right? That's probably true. But what he hasn't taken into account is all of those people who are newly self-employed, right? Which is more than 5% of the current population of self-employed people, even on its own. And I mean, the IFS estimate that there could be up to 1 million newly self-employed people in each tax year because of the churn. So it's certainly going to be greater than that. And then there's all those working through their own limited company. And ONS figures suggest that that number is somewhere around 710,000 sole director of limited companies, and they might consider themselves self-employed as well. So by the time you add these groups up, you realise that the SEISS scheme, I mean, the ONS say that there's 5 million self-employed people in the UK, approximately, just under at the moment. I think various people have done some modelling on this. The best estimates are something like 3.2 million of them are eligible for SEISS. So it's not 95%, you see, it's more like sort of 65% or something are included in SAVE, and 35% are excluded from it. So that's, yeah, that was a bit cheeky of him to say that, the 95% thing.
That's true. That's the thing that struck me. I remember when he said it thinking, well, that, you know, it's interesting to hear that that was based on the profits and not actually how they are classified as self-employed, because I know that if you're a director of a limited company, you have to furlough yourself, but then you cannot work. Is that right? So if I was a director, I would have to furlough myself and then not work, which means that I cannot make any money, and then that what you do get isn't based on dividends. So can you explain that, what it's like for?
Yeah, sure. And sorry, I mean, Faye asked the question too, didn't you? Know, what is there for these people that are excluded? So if you work for your own limited company, you're a director of that company, you're also an employee of that company. So you can furlough yourself as the company's employee. So effectively, your company can put you on furlough. Now, that will mean that via the government scheme, you can then make a claim for 80% of whatever you yourself are paid by your company, but only on the salary element of what you pay yourself, not any dividends that you might pay yourself. Now, we know from our own members that the vast majority of company directors will pay themselves quite a small salary. Typically, it's around £8,000 a month, because before that, that's the around the level where you get into having to pay national insurance. So you can pay yourself under that and not have to pay that, and you take the rest out as dividends. You can still, you must still pay tax on those dividends, and that tax has gone up in recent years. So it's not necessarily a particular tax dodge. There's also the factor that dividends is much more flexible. So if your business makes money, you can pay yourself what it's made, and if it doesn't make money, you don't pay yourself. And that's why the dividend route is quite popular amongst people, and lots of accountants will tell people to pay themselves in this way. It's just the way that it's always been done. Dividend income is not considered under the job retention scheme. The government say that is because they don't know where the dividends have come from. They don't know whether the dividends have come from your company or whether they've come from perhaps a share portfolio or something like that. I don't know whether there's another view out there, which was put to me by Mel Stride, the chairman of the Treasury Select Committee, when I gave evidence there, that, well, the government doesn't really like these people paying themselves in dividends, and perhaps they're sort of punishing them a little bit by excluding them from these schemes because, they just don't, they see it as they see it as tax efficient for the individual, but not for the revenue, and therefore they don't like it. I'm not going to comment. I don't know what the real answer is, but I know what the government says is because they don't know where the dividends have come from. We've come up with some ideas on that. We've said they should adopt a pay now, claw back later principle. So just pay out based on the dividends that you can see people have received, which, by the way, the vast majority of the time will come from their company profits. And then you can do some spot checks later on. You can ask people to be honest, just like you do with your normal tax return. I think that would sort that problem out to about 95, 96%. Nevertheless, the government hasn't done it. And actually, I'm doing another webinar for IPSE on Thursday when we've got the Small Business Minister, Paul Scully, coming in, and we're going to put this very question to him around dividends and why there isn't more support available for company directors. But yes, that job retention scheme is there for them, but it's only on the salary element. And sorry for going on, there's just one more thing I should point out. A lot of company directors will pay themselves a salary in one payment in the year. And if that payment is made after the 19th of March, then they will also not qualify because you have to have had what they call an RTI event. In other words, RTI is the real-time information system through which pay as you earn is calculated. You have to have put this payment through RTI before the 19th of March. And I didn't realize this, but a lot of company directors, actually what happens is their accountant says to them, look, it's got to the end of the tax year, you better pay yourself this lump sum so that it's inside this tax year for your accounts. And they do it right at the end of the tax year after the 19th of March. We said the government should move it to the 5th of April, but they have said, well, they haven't really said anything on it, but what they're privately saying is that would require primary legislation at this stage, and therefore there's a lot of other people who are missing out, even on that not very generous salary element. But even if they wanted to do that, they can't because of that 19th of March sort of deadline, which is, I don't think that was deliberate by government, by the way. It's very, very unfortunate, though, for those that want to make use of that scheme and can't do for that reason.
For our listeners, if you have questions on this, I'm aware it's quite a lot of information, especially if it's new, please do feel free to drop a question in now and we'll ask Andy them at the end. So just go to the question tab on your screen and you should be able to ask the question there. Moving on to the SEISS scheme, how difficult is the application process and what do you need to have ready beforehand, just for freelancers who may not have taken up on this scheme yet?
Sure. Okay. So look, if you're eligible, you should have been written to by HMRC around about the middle of this month, or even towards the beginning of this month. And in that email, they would have sent you a link and said, look, go onto this online form and check if you're eligible, right? If you haven't been, though, don't worry, because we can show you where to go. So if you didn't get that email for whatever reason, you can still go online and check if you're eligible. Now, the grant for SEISS covers the March, April and May. That's what it's doing. And if you are eligible, and if you claim online, then you will be sent a lump sum. And millions of people received this grant money last week, but you can still do it now. There's no deadline on this, so you can still go ahead and check this out and do it. It covers 80% of your average income. It's capped at 2,500. So the maximum that anyone's got from this is 7,500 from this one lump sum. That's the maximum that they're going to get. Although they may have, some people will have already got it. But in order to get that amount, you'd have had to have been earning in the high 40s of profit, but not over 50. Because if you earn over 50, as I said before, you get nothing. But that's kind of how it works. So this slide, which you can hopefully see in front of you now, this is actually a sort of screen grab from the government's website itself. There's the link at the top. So, but if you just Google, you know, claim a grant through self-employed support scheme, you will find this page. And it invites you on there to check if you are eligible, as you can see. And what you need to have with you in order to make this check is your unique taxpayer reference number. Now, if you've done tax returns in the past, you'll have this somewhere. Go back, look at your records, you'll see it there. Anything you've had from HMRC based on that will usually have it at the top of the letter as a sort of used as a reference number when they're writing to you. It's about 10 digits long, I think, and it's a mixture of numbers and letters from memory. You'll also need your national insurance number, which no one can ever remember, but you can find that if you've done tax returns before. You should be able to find that. It's one of those things. It's always good to try and commit it to your memory, which I think I've just about managed to do for myself. But yeah, if you know what your national insurance number is, you'll need that. You put those two things into a box, and it will say either you are not eligible or you are eligible.
Okay.
And then then you will go into another part of the website and actually go ahead and make the claim, and it will say to you, it's very, very simple, this process. It's not onerous, and you don't need help doing it. Don't listen to anyone who said, in fact, agents can't do it for you. You have to do it yourself. There was a little bit of ambulance chasing going on with accountants saying, we'll make a claim for you for 20% of your grant. I mean, you don't need to do that. This is anyone can do this. You just need to have those two things, and you'll then get a page which comes up which looks a bit like this, and it will say, this is how we've worked out your grant amount. Now I've put these numbers in just to keep the math simple, so nice round numbers, just so as an explainer. So you can see there it will say average trading profits over the last 3 years, by which they mean 16, 17, 17, 18, 18, 19, right? Not 19, 20 as we've discussed. So and if you've got all 3 of those years you've done tax returns, they'll do an average over all 3. But if you've only got the 18, 19 one, they'll just look at that. And let's say this person has got average profits, or in 18, 19 earned exactly £12,000, then they'll say, great, that they already have this information. This isn't stuff that you put in. They will give you these figures, and they'll say, right, so your average for 1 month then is 1,000. Your average over 3 months is 3 grand, therefore, and we're going to give you 80% of that, which in this case is 2,400. And all that information will just be there in front of you. That's what it will look like.
Can I just sorry,
yeah,
just quickly, for those who have a side hustle, I know that to be eligible for this scheme, over 50% of your income has to be from self-employment. If that's true, and you earn more from your side hustle than you do for your full-time job, does this grant amount then take into account what you also earn from your main income, or does it just look at what you earn from your side hustle? And we're assuming that it earns more than your full-time job, so they are eligible.
Yeah. It won't be interested in what you earn from your employment unless that's more than what you earn from your self-employment, in which case none of this applies to you and you don't get anything. Yeah. Which is arguably a bit unfair, particularly for those who are just straddling that, they're almost 50-50. It's all very well, I suppose, if you're earning, let's say you're earning 30 grand from an employment and you're getting maybe 5 grand from a self-employment, then you might say, well, this scheme, arguably isn't really for you because you're not really someone who is primarily self-employed. But if you're earning sort of 45% of your money from self-employment, you really might feel like, well, actually, I could do with this grant to help me out because I'm missing out on that right now because of the coronavirus. But yeah, if you earn more than 50% of your income from self-employment, they won't look at what you've earned from your employment. They won't. It's not part of the calculation.
Okay, that's really interesting. I've seen some people just suggest that if you do actually technically have an employer, but it's 0 hours or something, then that could impact how much you're given. So it's good to know that that's not true.
No, that's not true. Okay, so moving on to the, so you then click, yeah, this looks fine to me. And oh, by the way, I just want to say one other thing on this. Now, some people have said that there's another slightly unfair thing about how this is calculated, because if you're averaging over, let's just keep it simple and say that you did a tax return in 17-18 and in 18-19, but in 17-18 you only started self-employment quite late. So you sorry, I just silencing my phone there. So in 17-18 you only started self-employment quite late, and therefore you only earned, say, £1,000, and then in the next tax year you did the full year of self-employment and you earned £12,000. Well, they're going to average those two figures together, you know, despite the fact that you only did a little bit, because you only just started self-employment at the end of the tax year. They're going to say, well, that's 13 divided by 2, that's 6,500, and then they're going to base your grant on that. And that does, a lot of people are being hit by that. You know, it's pretty unfair, I think, that, because it's clear that you probably would really be earning £12,000 a year. That's what that information actually tells us. But the government will use that previous tax year, even if there's only a tiny amount in it, to average out the two. So people are missing out there.
That's really interesting. It doesn't seem fair at all. It feels like this is like tries to cover as many people as possible, but does leave a lot of people kind of missing out.
Yeah. There's various ways that you can not do as well out of the scheme as you thought you might do. Let's put it that way, and that's one of them. I mean, I also had a bullet point which I didn't talk to on a previous slide about people who take a break. If you've got working mothers who go on maternity leave, so they take a break to have a child during the tax year, which means that their income will be very much down on what it would have been had they not have done that, and that also gets fed into the calculation. So they're getting 80% of less than they would have done had they not had a child. And does the SAFE scheme actually want to discriminate against working mums in that way? That's the sort of, you see what I mean? So there's various problems. Or you might have had a career break to do anything else. You might have been unwell. You might have, had to go into hospital for whatever reason, had some health problems, all of which will not be considered. It is a rough and ready calculation. It's just like, you earn this is the average, get 80% of that. That's how it works, with no sort of like ability to kind of say, well, hang on a minute, did you have a child? Did you do this? Did you do that? There's none of that. It's just boom, here's the calculation, there's the money. Okay, so finally you then get this declaration page where you just have to confirm that all the information is accurate, you accept it and submit it, you get given a reference number, and you'll get paid within 6 working days. In the examples that I have seen, people have been paid much quicker than the 6 working days. So, the good thing about this is it's a very, very easy process to do. So if you haven't done it yet, I would really recommend that you go online and see if you're eligible. If you are eligible, it's literally, we're talking 3 or 4 minutes you're on the computer for to do this, and then you get the money within 6 working days, in my experience. Not my personal, but in people that I know who I've done this process with, 2 or 3 working days is more like it. Now, credit where credit's due to HMRC and to HMT, who I spend a lot of time giving a hard time to on behalf of self-employed people. They've got this thing set up and they've got it running and it works smoothly and people are getting the money and they're doing it ahead of schedule. The Chancellor initially said people would be getting the money in early June. Well, they've actually got it in sort of mid to late May. So, they've done very well to get this up and running, and it's great. But there's still lots of people that miss out unfairly, I think. And there is this problem around the averaging out, which means people are doing less well out of the scheme than perhaps they really should be doing if it was to work, if it was to do what it's supposed to do, which is to kind of support people whose income has been lost due to coronavirus and give them 80% of what they might reasonably have expected to earn were it not for the coronavirus. It's not totally working well like that.
So when will this scheme end? Is it still going to be extended until autumn, or is it just for the initial period in spring?
Yeah. So this is the big sort of burning question. We've heard nothing about what's going to happen with the future of this scheme at the moment. It's conspicuous by its absence, any kind of announcement on this. So a few weeks ago, I had said, well, of course it's going to be extended into June because the job retention scheme has, and the coronavirus is still affecting people's incomes, but we haven't heard anything about that. So I'm beginning to worry about it. And in fact, IPSE is campaigning on this issue now. We've issued a press release. We're going to be speaking to, well, I've spoken to the Treasury several times and called for this. We're going to be writing to the Chancellor. We're going to be teaming up with some other organisations who I know are calling for the same thing, notably the Federation of Small Business. And we are going to push for this scheme to be extended into June and beyond. The job retention scheme, which is the furlough one, which is mainly for employees, but limited company directors can make use of it too, to a very limited extent. That has been put, that the government has announced that that's going to be extended into October. And what they've suggested is that they're going to keep it as it is right now. You get 80% under that scheme if you furlough the employee. They're going to keep it like that for now, but they are going to start making it a bit less generous. They're going to ask employers to pay more, essentially, into the scheme, so that when the employee goes on furlough, rather than the government giving them 80%, the government will give 60% and the employer will have to make up the other 20. I mean, they haven't actually nailed that down yet on those percentages, but that's the kind of thing that they're talking about doing. They're looking at ways to sort of basically make it cheaper for government, because all this stuff is very, very expensive if you're the government, you know, I have to say. But so that's the job retention scheme, and we've had, you know, statements in Parliament about that. We haven't heard anything on SEISS yet. I think we're going to hear something this week. There's been talk of backbenchers rebelling, Tory backbenchers rebelling if he doesn't extend it. So there's definitely a bit of mood music around this, and we had Ed Davey from the Lib Dems on our webinar last week, and he was saying that, you know, they're pushing for it, and he thinks that the government has gone very, very quiet on it, and, you know, he doesn't know what's going on there. So we don't know what's going to happen with the future of this scheme. At the moment, we have this one payment which is there to cover March, April, May. Beyond that, we don't know what's going to happen. But as I said before, the important thing to note is there is currently no deadline in place for claiming the grant for March, April and May. Now, millions of people have already claimed it, but if you haven't, there's nothing to stop you from doing it now, and it may well be the case that there'll be nothing to stop you doing it next month or the month after. But my advice would be get in there and do it now. You know, do it while we can before the government does decide to close it. At some stage, it will close it. But for that period, you can make that. You can still go online. You can still do that and make that claim now. And I suspect you'll be able to do that for well, at least another month or two, I'd have thought. But the big question is, what about June? So what about people who have made that claim now, but what are they going to do next month, because their business is still really horribly impacted by the coronavirus?
That's so interesting. We now have some questions from people who are listening in. I won't name you because it talks about personal finances, so we'll keep these anonymous. Please do feel free, anyone else listening, if you want to send in your questions while we go through these first couple. We have time to get through them. So firstly, someone sent in saying, I didn't qualify for SEISS, I can't get universal credit either. My income has been part self-employment and part PAYE, but I haven't worked in 10 weeks. What options are left for me? Job seekers allowance?
Yeah, so if you're in a UC area, and my understanding is that most places now are doing universal credit, where they've brought all these different benefits into one. And I think, did you say, Jess, that they couldn't claim UC, they didn't qualify for that?
Yeah, they say they can't get it.
Right, okay, and it might be, I have colleagues who are much more expert on UC than I am, but my understanding is that if you have savings of over £16,000, you can't claim universal credit. So that could be one problem. There's also the problem that universal credit looks at your whole family. It looks at your household, basically. So if you have a husband or wife who is earning, you know, a sufficient amount of money, that means that you don't get UC, because I suppose the expectation is where you can live off whatever they're earning. So these are the reasons why UC might not have been applicable to you. Job seekers allowance, I think if you're in a UC area, I think, I'm not an expert on this again, means that you won't be able to get that if you've made an application for UC and been denied it. But if you're not in a UC area, and you can make a claim for UC. But really, if you're not getting UC and you can't get SEISS and you can't make use of the job retention scheme, then I don't know what there is very much left for you to do. I don't really understand what the government's expecting you to do in that situation, but perhaps it's because you had savings and the government's expecting that you can live off those for the foreseeable. That would be my guess. But there are quite a few people who are in this precarious situation where there doesn't appear to be any help for them at all.
Okay, the second question is a little bit similar, but we'll ask it as well. They say, hello, so I started freelancing full-time as a web and graphic designer in July of 2019 and therefore do not qualify for SEISS. Apart from trying to keep working, which is proving difficult, what else can I do to keep money coming in?
Yeah, so this person falls into that newly self-employed bracket. So because they started trading since April 2019, they're not included in SEISS. Now, we think this is unfair, and it would be such an easy thing to remedy because this person could do their tax return for 1920, and then they could submit that, and the government could say, okay, so you earn, whatever you earn, let's say it's £12,000 in that year, it's 1,000 on average, 3,000, 2,400 grant, there you go. But we don't have that option because the government will not let those newly self-employed people into the scheme, which we are campaigning for them to do. And we are going to say to them, look, if you're going to extend this scheme, which we want you to do, it's also an opportunity to extend it to this other group. So that's something we're definitely looking at. Practical help, though, I mean, the only thing that's really available is universal credit. There is also these bounce back loans. So the initial loan system, largely targeting some larger businesses, was the coronavirus business interruption loan, or CBILS as they were known. They were problematic and the banks didn't really want to lend them, and it was all because the government wasn't guaranteeing 100% of the amount that the bank was lending out. They were guaranteeing 80%. In fact, when you looked into it, it was actually more like 60%. And the banks were therefore reluctant to lend the money out, and they put lots of barriers in place to people getting those loans. The bounce back loans are targeting smaller businesses, and they are easier to get. And the anecdotal information that we've received is that you can go and apply at the bank for these bounce back loans, and people are generally getting them. It's 0% interest for the first 12 months. After that, the terms do change, so watch out for that. But if you're minded to, if you want to, if you have to, you can go and you could have a look at the bounce back loans. The only thing that I would say is that lots of people have been saying to us, why would I want to take out a loan now at this time where, my business has never been doing more badly, and I'm not sure, there's no end in sight. When is my business going to pick up again? When am I going to be allowed to properly go back to work? And when are customers going to be able to allow to engage with me in the way that they need to do for my business to thrive and succeed? And therefore they're very nervous about taking on the debt, and I fully understand that. But if you've exhausted the other options, that is something you could look at.
That's a good answer. There's another question. They've sent in a couple, so I just kind of put them together. So they ask what lobbying is happening for new freelancers, and they comment that the government is expecting, I think they mean new freelancers, but maybe freelancers in general, to lose their homes, which I think really kind of drums in the fact that these are real people, aren't they? And these schemes, when people do drop through the cracks of them, it has real personal financial implications for so many people.
Yeah, I mean, people are desperately worried about that. When this scheme was announced, and just before it, we were hearing from, my inbox was absolutely full of people saying, I'm desperately worried. Business has fallen off the edge of a cliff, and I've got no income coming in, and what am I going to do? Now, a lot of those people are going to be helped out by SEISS, but not everyone will be, and the newly self-employed are a large group who are in that boat. And I think that if you haven't done so already, have a look at universal credit. There is a housing allowance bit within that, which is more generous than it used to be. The government has also removed this rather pernicious mechanism within universal credit called the minimum income floor, which basically penalise self-employed UC claimants. They've got rid of that, which makes it a bit better. But there are restrictions, as I say. If you've got savings of over £16,000, then you won't be able to claim it. So these are the things you can do. If you're the question referenced losing your home, there have been some measures announced around you can apply for a mortgage holiday from your bank, and they pretty much are giving them out, I think. So you can say to the bank, look, I can't pay my mortgage for a few months, and they will accommodate that. But do talk to the bank about that. Don't just cancel the direct debit. That could land you in hot water. Just speak to the bank and say, I'd like to have a mortgage holiday, and they will. Most of the lenders are going along with that. I think all of them are. I haven't heard of any that aren't. So there are a few other things that you can do. There's also some tax deferrals that are going on there around self-assessment. You don't have to make the payment on account in July. But all of this is really just, it doesn't really help you if you're used to having money coming in and that money is not coming in anymore, and you're not in the SEISS scheme, which is going to help to replace that income. And that's the problem.
The person who asked the question has since sent in another one, just saying that they're not eligible for universal credit. But what lobbying is being done in terms of the new freelancers? Are you speaking to anyone about this? I'm sure you know it's something that you are doing.
Yeah, so as I said at the start, we've been involved in ongoing discussions. I mean, when SEISS was set up, we directly spoke to the Chancellor, and we negotiated the terms of SEISS, and we pushed for it to be made more generous than it was. But we were pretty pleased that we got some, we recognised that it was a generous scheme for those that fall inside it and those who don't get caught out by that averaging kind of barrier. So we were pleased with that. And we've been pushing ever since for these other groups who don't benefit to be included within it. And we are now pushing for the scheme to be extended. And what we're saying is, if we're going to extend it, which we want you to do, it's the perfect opportunity now to say, look, we know that lots of people have missed out on this. So please get these groups looked at, particularly the newly self-employed and also the company directors. We don't necessarily think the company directors should be in the SEISS scheme. We just think some more help should be done for them. Maybe they should have their own scheme because, excuse me, the job retention scheme doesn't really work for them. And the SEISS scheme is really for sole traders. And so there's complications with how that will work with the dividends and everything like that. They wouldn't be able to calculate it in that rough and ready same way. So perhaps something bespoke needs to happen for limited company directors, but we do think something should happen for them. And yes, the newly self-employed, we are lobbying the government on it. We have been persistently ever since the scheme was set up. We've said that this is unfair. We've given evidence to the Treasury Select Committee where we raised this really strongly. There's a group that have really missed out here. And I'm not sure that I'm totally satisfied with this reason that the government has given, which is they're worried about fraud. I'd like to think there'd be some things we could put in place to mitigate that risk and then get the help to people that really need it.
Just on that, well, because this person sent a few questions, but to everyone listening, if after this webinar you think of any more questions, feel free to send them in now. But if afterwards you think of some questions, then do head to Freelance Corner and just send us a direct message on there, and then we'll make sure that they're answered as well. Faye, I believe there's a question that we were sent in from Twitter that you have for Andy.
Yes, so one person from Twitter asks, is there any additional surcharge freelancers can add to their invoices at the moment for late payments, given the difficult circumstances?
Well, I don't think that you can do anything additional because of coronavirus, right? So there's been no change to that, but there are pre-existing rules. You can charge interest on an invoice that hasn't been paid once it exceeds the 30 days. So if you're 30 days late, then you can charge interest, and you're legally allowed to charge 8% interest above the Bank of England base rate, which is currently, I think, 0.1%. So it's 8.01% of interest that you can charge on a late paid invoice. But you have to weigh that up and consider. The trouble with late payment is it's a massive issue for the self-employed. It's forgetting the coronavirus for a moment. It's a huge issue anyway, and I think that the coronavirus has really brought it into sharp focus because now all the money's drying up for everyone, and we've been doing a push and saying to large clients, pay your invoices, help people get the money that they need. This is a time of crisis. If you're sitting on an invoice to a small supplier, pay it now. But the difficulty that many people find is they don't want to get into charging interest because it looks confrontational. They need to keep that relationship with their client happy. because it's all about keeping the client happy. And there's a real tension there. But look, you can do it, and if you go online, you'll find lots of information around this, including on IPSE's website, around what you're allowed to do in a late payment kind of situation. I was struck that at our National Freelancers Day, it's coming up in 3 weeks, but at last year's one, we had is it Adam Kay, the writer of the book? He used to work in a hospital, and he wrote a book called This Is Going to Hurt, all about his experiences as a doctor. But he's now a freelancer, and he said, my best tip I've ever had on this is I just tell all my clients that my fees are going up by 10%, but then I introduced a 10% discount if you pay within 2 weeks. And then he said, after that, I got paid within 2 weeks every time. So he said, I'm going to put that. Now, not everyone's going to be in a position to do that. I appreciate that's true, but that's a sort of really useful tip, I think, for some people. It might work for you. Just if you've got, if you're working with 2, 3, 4, 5, 6 clients, write to them all and say, look, I'm putting up my fees by 10%. However, I will be introducing an early payment discount, and then just put that on your invoice. So your invoice will say, 500 quid, but 10% discount is 450 quid if you pay within 2 weeks. And he said everyone pays him within 2 weeks. He said it worked a dream. So maybe that's not going to work for everyone, but I thought it was a good tip.
Yeah, I think that tip that Adam Kay said has featured on at least 2 of our podcasts now, Faye, and every time I mention it, every time you say that, I think it's brilliant though, Andy, I agree. I just wanted to touch on that because for some of our listeners, you might not be aware of what Freelance Corner is, and I'll link to IPSE. So IPSE, again, the Association of Independent Professionals and the Self-Employed, launched Freelance Corner, which is an online platform for the UK's freelancers, but also has what we call venture packs. They're support packages for freelancers, and they come at 3 price points. I'm just going to quickly run through them. They're all under £30 a month. So we have an Essentials pack, which is the cheapest at £8.49 a month, a Protection pack for £19.49, and the Ultimate pack for £29.49. So all cheaper than the gym membership that we all had before coronavirus. And one thing that you get with that is a discount with our partner Paid, which means that you're guaranteed invoice payment. So it's one of those schemes where you are guaranteed payment on every invoice that you send. You also are eligible for up to £10,000 if a client goes bust, which obviously in the current climate, unfortunately, is more likely than ever. That's subject to terms and conditions, but up to £10,000 if a client goes bust. Again, up to £10,000 for agency default, and up to £2,500 for an umbrella company default. So that's just what you're eligible for. We also cover up to £2,000 in sick pay if you're ill for 3 or more weeks. Again, subject to terms and conditions, but you can find loads more information on freelancecorner.co.uk. There's loads more stuff that you get as part of your package. But you can sign up for free, and when you sign up for free, you get all the content, the community, access to where you can see the events, the webinars. We're hoping to do more of these webinars. So do head online. As I say, it's free to sign up. You don't have to buy a pack at all. Everything on the site in terms of the community aspects are the same. One feature that we have are corners. So they're like groups of freelancers, and they're based on your career, what you do. So one that I love, because I'm a freelance writer as well as my full-time job, is for freelance writers, social media people, because it gives you a chance to ask those questions that you have, and that it's a safe space. There's no question too stupid, or no one's told me that my questions are too stupid yet, maybe is the correct way to say it. But please do have a look online, and as I say, if there are any questions that you think of afterwards, we'll do our best to answer them. But thank you so much, Andy. Is there anything else you wanted to add? Anything you wanted to cover?
Not really. I just urge people, if you haven't yet done so, go online and check if you're eligible for the SEISS scheme, because it's a very simple process, and it could be that you could get a decent grant through that you're entitled to. So if you haven't already done so, Google claim a grant through the self-employment scheme. I think that will get you there, or follow the link that I had up in the slides. And I think we're going to send around the links, aren't we? We're going to send it, people are going to get an email. I think they are with some of these links within the next day or so. So yeah, and sign up to IPSE's newsletter and go to Freelance Corner to get more information.
Great. Well, thank you, Andy, and thank you for all of those that are listening at home. Freelance Corner, like Jess said, is the online platform for the UK's freelancers. So please do sign up for free and be the first to hear about the future webinars and lots more fun and useful content on the platform too. So thank you.
Thanks everybody, and stay safe at home. Thanks again, Andy. Bye.
Thank you. Bye.